Hi, this is Mani from BSc to NSE.com. In this video, I'm going to talk about flexible trading quantity. This is one thing you can add. It will not conflict with any of what you're doing already. So I hope that you will find this useful. I have provided my number here in case any of your friends require a trading account, or if you want to open a trading account, then you can drop me a message here, or any basic queries about trading, you can reach out to me. So the topic itself relies on fixing something, that a mistake that all of us would do when we begin trading. This is a rookie mistake where we deploy all the funds in one go. So if you are trading in either options or if you're trading in either equity, so whatever budget we have, small budget, let's say 10K, 20K, 30K, 40K, 50K, we may tend to deploy everything in one shot, and we would probably pick up a trend, look at a chart, look at few things. Rather than spreading out the entry, we would just enter in one shot, right? So how to solve this is, to begin with, whatever trade, whatever script that you enter, whatever budget you have, max enter only 10% of it. Let's say you have budget for 5 lots, you enter only 1 lot, so that will still be 20%, but you cannot reduce below 1 lot. So if you have budget for 10 lots, option buying as well as selling, then you enter only 1 lot to begin with, and then allow some time to pass. So let's say you're going to hold the trade over 4 days, at least allow 3 hours to pass, and then try and review the situation, and then decide where to add quantity to the trade, right? So preferably you want to add quantity on the side where you're making profits. So let's say you don't have budget for selling, you have only options buyer, so it can either be in profit or loss after, let's say, 3-4 hours. So you should add quantity only if you are a purely option buyer or just equity buying. You should keep adding quantity only if your overall position is in profits. So if it's not in profits, then it doesn't make sense to add further quantity to the trade. There's some reason that the price has gone the other way, and it may continue to go that way. So unless the price recovers, comes back, and your side of the trade continues to grow, it doesn't make sense to add further quantity to it. Now this is typically what others will do, is they'll try to average in losses, right? So that can sometimes work, but when it continues to go further down, then that's how you end up with a big loss. So the key to trading is to avoid a big loss and to maximize the profits. So there'll be times when the trade you enter is right and it continues to stay right throughout the time. So it makes sense to, you would have continued to add quantity, and you would have eventually built, let's say, up to 50%, up to 70% of your max quantity, while your average entry price is much lower. So that's a much more comfortable trade in my opinion. So let's say if you're an option spread kind of a trader where you buy at the money and you sell out of the money, at least one of them will be in profits after a period of, let's say, 3-4 hours. So then you can decide whichever is in profits, you can try and add quantity there. Or if the trend continues, then you can add, then you're in profits in ATM. If you're in profits in ATM, then you can add quantity, like instead of 1:1, you can convert it to 2:2. But if your at the money is bleeding, then you can just add quantity on your out of the money contract where you're selling it. So you can turn 1:1 to 1:2, 1:3, 1:4 to play defense if you still believe that the at the money price will recover. Otherwise, you can eventually book a loss. So book a loss, you'll be booking loss only for one lot, while when things are going good for you, you're actually making profits of, say, 3 or 4 lots or 5 lots also. So this is one way that will help you maximize the profits and minimize the losses. So like I said, enter with minimal quantity to begin with, and let's say if you're a positional trader, you have 4 more days. Let's say your trade from Monday to Thursday, which is the weekly expiry. So Monday morning you enter a lot, you wait post noon after the European markets are open, you see if that and then decide where to add quantity, right? So and then the next quantity you can add on Tuesday, and then Wednesday, and then Thursday. Thursday is the last day, but you can still add quantity if it's a profitable trade, and if the trend continues to be in the same direction, right? So this way, you're being very flexible with your trading quantity. You're not throwing all the money at the start of the trade. And here the best part is you get to review your own trade after a while, right? So that's the best part in my opinion, because you can very easily um, make a mistake, because you can take a hard stance and you can say, okay, the market is only going to go up, and here you actually you're not forcing yourself to accept that markets will only go up. So you're just starting with one lot and you're saying markets can go the other way, so let me watch and add quantity. So I'll give you a few example of weekly moves of Nifty charts. So these are charts that I've pulled up. Now this entire line is Monday to Thursday. These are 15-minute candles. So this is the first 15-minute candle of the week on Monday, right? So typically what I see is if the price doesn't go below this range, then the markets are bullish. So, or you can consider open price plus or minus 30 points for Nifty, which is approximately 0.25%. But otherwise, if you're just purely referring to charts, the Monday first 15-minute candle, now the lowest point of the candle, below that if the price goes, then it's bearish. Even if it is within the range, it is still bullish, because the price, more often than not, 70% of the times markets are bullish. So if it's in the neutral zone, you still have to consider that markets are bullish. So in this case, let's say by 10 o'clock, it's still in the neutral zone. It has broken down below, but it didn't hold for more than 15-30 minutes. It's again above and again testing again and above. So I might have added one lot of long position here. So at the money buy and selling out of the money. So this is like let me see if I can change this to the right side. So you can see, so on the right side of the chart you can see that this is 14,400. So the lower range, so 14,400 call, I can go for it, and probably to begin with I can short something like 14,800 CE. So which is 400 points away. So the long position that I may take is 14,400 call, and short I may short 14,800 CE. So it's a 1:1 spread. It's a bullish position, and by afternoon, if you can see here, somewhere around here, the markets are still in neutral / bullish position. So I may add the second lot here, right? And then Tuesday opens a little higher above this range. So enter the bullish space, consolidates, eventually heads up, right? So by Tuesday post noon, I may add the third lot, and then Wednesday opens higher, but then sees a drastic profit booking. So Wednesday's first 15-minute range, if you see the price comes down below. So if you are eventually smart and mature, I mean, sometimes we don't want to reduce the quantity. So I'll be having 3 lots of long. You can probably book 1 lot of long here. But if you're still holding on to the 3 lots, it still comes to the support zone and then again recovers on Thursday. It again holds the support line, trend line, and goes up. So, or if I'm not exiting the at the money quantity spread, I can actually add 3:3. I can shift it to something like 3:6. So Wednesday, when I see profit booking happening, I can try and add further quantity to out of the money, convert 3:3 into 3:6 or 3:9 eventually on even Thursday morning. So, and when you try to increase the out of the money quantity, it becomes a naked position. So you can buy cover still 200-300 points away. So cover can be somewhere around 15,500 call. So for someone who's not familiar with options, these terminologies can be a little confusing. We have some couple of videos on basics of options. You can go through them. But for people who have traded options, I'm sure you'll understand this. So this is one particular week where the price action is actually bullish, but Wednesday saw some profit booking, came back to support, and then Thursday still ended much higher than the Monday morning levels, right? So Friday we need not be bothered because I typically trade positional also Monday to Thursday. Friday, of course, it eventually sees more profit booking and then ends in the neutral zone. The week itself ends on a neutral note. So let me take a couple of other examples where we can see a failure also, and how we would do on a failure month, failure week. Because this was a successful trade. Now this is a week where the circle candle is the Monday morning first 15-minute range. So morning I may add one lot of long, similar to the previous chart. Markets are around 15,200, 250, 300. So let's say at the money call I may buy 15,300 call. Out of the money short I may short 15,700 call, right? 400 points away. And I can enter a 1:1 trade, and then post noon, though it's still not bullish, I can add another lot because it's still in the neutral / bullish. It's not below the morning first 15-minute range point. So Monday still ends bullish. Tuesday I will still have two lots of long, and it opens much higher, and it probably stays nicely high almost till noon point or like 10 o'clock 11 o'clock times, but then eventually breaks below at 11 o'clock time. So either here, instead of 2:2 long, out of the money I start to need adding lots here, and then it takes support. It doesn't take support here, but tries to take support here, rebounds a little bit, and Wednesday it eventually cracks below, right? So here the trade starts going in the other way, totally the other way. So if I had added out of the money, then there'll be little difference added, but I would probably not be in much of a profits here. So either I can totally exit it or continue to add difference by adding more lots to out of the money. Of course, for the naked lots, you still need to buy cover another 200, 300 points or 400 points at least. So here it eventually goes negative. Now, if I am a contra trader where the trade has shifted, then I need to start adding put option here, put option spread, where I buy 15,200 or 15,300 PE, and then probably sell 15,000 PE as 1:1 spread to begin with. And then on Thursday you see that it continues to stay below and continues to go down through the day, right? So here in this case the long position would not have worked out for us, so you would try and exit with a minimal loss. And if I started adding the put option, then I might have made some money there. So this is a week where the trend started bullish, but then Tuesday there was profit booking, and then Wednesday the trend totally reverses to bearish, where Wednesday evening by the close it's closing well below the Monday low or Monday first 15-minute range low. So this is a week where the market has turned upside down, correct? So you will need to adjust your trading position as well as trading quantity. So the problem is if you are too rigid on your trading quantity and with your idea of the trend. So somebody who went long and assumes that market will eventually recover will be taking a long position and will just wait on it. So it's not advisable to do that. It's better to go along with the market, pick up some levels. You can do any other trend following indicator also, but based on that you have to intelligently vary your quantity. So this is a failed trade or a week where you had to struggle. This is a tough week. This is not an easy week to trade, though I've said it in words. It's very difficult to execute because your mind has to change and you have to adapt. Let me give you another week. This was, I think, the budget week. So budget was tricky because I started with only one lot. In fact, I had a spread on long as well as a short. I had a call option spread as well as a put option spread in the morning, because morning the price was in the neutral zone and price had also dropped below. So the budget sort of started by 10 o'clock, 11 o'clock times, and then post noon it broke up. So I booked out the PE side after it broke up in this range, and I started with 1 lot on call option as well as put option spread, and then post noon by end of the day I added another lot. So it was 2:2 long position here, and by noon it had skyrocketed here. So around noon somewhere here I added the second lot luckily, and by evening it was in very good profits, and of course it had even crossed my out of the money selling. So this is Bank Nifty I'm showing, but or Nifty only. Yeah. So I had my out of the money crossed by Monday evening itself. So Wednesday I still added the third lot. I was too scared to add further lots to it, but honestly looking back, you could have added much more quantity because the overall position was in very good profits. So that's a time to continue to add, and as long as the trend stays, again you can see Tuesday the morning opening price is here, and it doesn't actually fall below that through the day, right? It goes up, sees some correction, and eventually pulls back up from here, and then Wednesday holds, and then Thursday also holds nicely. Wednesday also you can see the opening candle, it never retests the low of the first 15-minute range. Thursday it sort of lingers below the Thursday opening price, but eventually holds, comes back up. So even if you book profits here, when you see signs of price just cracking a little below the opening price on Thursday, you would have still exited at 14,750, but your starting trade would have been like 13,750. It's almost 1,000 point. But these opportunities don't come all the time, but this is another positive trade where you could have continued to add the long position, keep adding spreads to it. Because this was an event, it was you should always have had only 1:1 spread and keep on adding to it. When price explodes like this, doesn't make sense to add more quantity in out of the money. Like I said, unless the out of the money comes in profits, it doesn't make sense to add more quantity to do it. Thank you for watching. Subscribe to our channel. Stay in touch. Thank you. Bye bye.